Hello, I'm Robin Henry, a partner at Collier Bristow and head of our dispute resolution team, which specialises in banking and finance law. Today, I'm with my associate, Jean-Martin Louw. John, would you like to introduce yourself?
Yes, thanks, Robin. Hi, I'm Jean-Martin Louw. I'm an associate with Robin in our disputes team, and I largely focus on banking and financial disputes.
And today, we want to talk to you about debanking. And John is going to introduce that subject. So, John, what is it and what can be done about it?
So, for a while now, we've seen that banks are struggling to keep up with their compliance responsibilities and trying to balance those responsibilities with their customer care obligations. And the most recent sort of big issue that's got a lot of media attention, especially when Nigel Farage became involved, is debanking. So banks call it de-risking, but what we're talking about is the recent spate of incidents where people and businesses are suddenly waking up to find that their bank accounts have been closed with little or, in a lot of cases, no warning whatsoever. And so the reasons why a bank might want to discontinue its relationship with a customer and decide to close their account can be many, but generally they relate to some perceived risk for the institution, which can be fraud risk or credit risk, reputational risk, or some other apparent risk, for instance, stemming from the bank's concerns about a lack of experience in relation to a particular industry or a business or a country. So there have also been cases where banks close accounts simply for commercial reasons. For example, the sort of perceived troublesome nature of a business customer's account that involves frequent payments abroad, including to risky countries. Certain jurisdictions will attract greater scrutiny if banks deem them to be high risk, for example, because they're experiencing high levels of corruption or they're subject to international sanctions or have poor tax governance. There's a non-government body called Transparency International, which was founded by former employees of the World Bank. And for anyone who's interested, they publish a corruption perceptions index, which is a helpful guide to the various jurisdictions which might be deemed high risk.
And just to mention here, this was in the news this week that the latest corruption perception index has shown that the UK is now, to our shame, 20th on the list, which is our lowest ranking ever. That's just an aside. Back to you, John.
That's a little bit embarrassing. Given how severely banks can be prosecuted for falling foul of their anti-money laundering obligations, it's sort of unsurprising that they will prioritize compliance. And we've seen banks become hypersensitive as a result of the regulatory system in which they operate, which really incentivizes over-reporting rather than an emphasis on undertaking more detailed and balanced assessments and evaluating all the relevant factors in any particular case where an account is flagged as suspicious.
So what effect can this have on bank customers?
Well, I mean, unfortunately, customers get caught in the crossfire and can be left without access to their funds for considerable time. Hastily terminating someone's account can have really dreadful consequences for businesses. Obviously, it can disrupt their financial activities. They can start missing payments, including payment obligations to HMRC, can affect their credit ratings and hinder their business operations in general. And then also when a bank closes an account, customers often face difficulty finding alternative banking options, especially if the closure is due to the bank's risk assessment procedures.
So what can you do if a bank decides to close your account? Are there any limits to how banks can act?
The reality is that as long as the bank has given adequate notice, there's usually little that customers can do when a bank decides to close their account. The bank's terms and conditions usually give them powers to terminate customer relationships in a really wide array of circumstances that rarely or ever require any wrongdoing on the customer's part. But the Financial Ombudsman, or FOS, has made it clear that it does require banks to give reasonable notice of at least 30 days if they intend to close a personal bank account. And that's intended to allow customers sufficient time to make alternative banking arrangements. But it is recognized that longer notice periods are going to be appropriate for business customers. So if you do find yourself in a situation where the bank decides to close your account, you should bear in mind that the reasonableness of the bank's conduct can always be measured against its customer care obligations in the Financial Conduct Authority's Banking Conduct of Business Sourcebook, which is often referred to as BCOBS. And under BCOBS, A banking institution has to pay due regard to the interests of its customers, treat them fairly, communicate information to them in a clear way. And the FCA's newly imposed consumer duty within BCOBs also requires that banks must act to deliver good outcomes for retail customers. And so the FCA said that this is intended to be a much higher bar, and particular care is going to be required when dealing with a customer who might be in financial difficulties. And the closure of a bank account on short notice could, for example, have severe impact on an organization's ability to continue trading. And then also overlapping the consumer principle is the so-called cross-cutting rules, which requires banks to act in good faith towards retail customers and take reasonable steps to avoid foreseeable harm. So if you think a bank has acted unreasonably or in breach of those principles, you can always ask the Financial Ombudsman Service to review the bank's decision. And in response to a complaint, FOS can order the bank to pay financial compensation of up to £415,000 or take other steps to remedy the situation. I mean, it is within FOS's powers to order that an account should remain open or reinstated, but in reality, FOS can take anywhere between 12 and 18 months to investigate and resolve a complaint. So the reality is that although it's potentially helpful in the long run for customers who have suffered financial losses, FOS doesn't provide any urgent relief for someone that is facing an imminent closure of their account, really.
And remind me, how does Nigel Farage fit into all of this?
Well, you might remember that around the time of the Nigel Farage incident, where NatWest decided to close his account, and there was suspicion that it was all to do with his political beliefs, the government announced that it was going to clamp down on what it called unfair bank account closures, which basically was a proposal to increase the notice period when closing a bank account to 90 days. The theory being that this will give customers more time to challenge a decision through the Financial Ombudsman Service or find a replacement bank. But that legislation hasn't actually come into play yet. It really was a direct response to the Nigel Farage incident and sort of wider concerns that banks could close people's accounts if they disagreed with their political beliefs. So those new rules are going to be primarily focused on protecting freedom of expression and political beliefs, but they will also require banks to give a reason for closing an account, a clear reason. And that seems to be a positive step. But I mean, I would question whether it's going to offer any real value to someone whose account has just been closed, because the vast majority of bank account closures are unrelated to political preferences. And I don't think that these changes tackle the wider issue. It might give customers greater transparency, which would help them to make a fuller assessment about whether the bank's decision to terminate their account is permitted under its terms and conditions in any particular case. But since those terms are usually so far skewed in the bank's favor, that information about why an account has been closed is unlikely to be of any real assistance to anybody.
Thanks. Is there anything else which someone could do in this situation?
Yeah, one thing worth noting is that you can always individuals can employ their rights under the Data Protection Act to try find out the reason for the closure of their account. Anyone can submit a data access request or SAR, which will require their bank to hand over within a month all personal information that it holds about them. And this could include, for example, emails, internal reports about the individual, which might assist them to uncover why the bank has closed their account. And there was actually a case before the courts this month involving a situation where Revolut closed the account of a guy called Ildar Uzbekov, who is the son of a Russian oligarch. And most people don't have the luxury of being able to spend loads of money on suing their bank for closing their account, but Mr. Uzbekov did. He claimed that he was the victim of a, quote, malicious and spurious campaign aimed in part at debanking him and making his position in the UK untenable, and that Revolut took the allegations that had been made about him in the news and in public, they took them at face value. Revolut's response was that it would damage their reputation and goodwill if they kept his account open, because there were, suspicions based on financial investigations in relation to him, and there was indications that he may have been involved in money laundering. And ultimately, his high court claim was struck out last week. But I mean, I'm not really surprised by that, because there seemed to be good enough reason for Revolut to at least suspect that something untoward was going on with his financial circumstances. And he wasn't actually claiming that he'd suffered any loss in the action against Revolut. He was saying that Revolut's actions caused him some sort of reputational harm, and he wanted to vindicate his reputation and correct the factual record. But the bank's contractual powers to close accounts in the circumstances are just far too wide.
So, just to sum up, do you think that banks will ever be actually prevented from closing customer accounts?
I think it's unlikely that we're ever going to see the law fetter a bank's power to close accounts at will. And so maybe it's the anti-money laundering machine that needs to be reformed. The FCA is apparently undertaking further work in consultation with banks to better understand the scale of account closures and the reasons behind them. But ultimately, it's a policy matter for the government to enact further protections for businesses and consumers who are suffering as a result of the system in which banks are obliged to operate.
Thanks very much, John. That was really interesting. So that brings us to the end of today's podcast on debanking. If you have any questions for us, please do get in touch at www.collierbristow.com. Thanks very much for joining us, and do look out for our next Collier Bristow podcasts.